freedom, freedom, freedom over fame, freedom over cycle stays the same.
Welcome. First of all, welcome. This is Unsolicited Perspectives, and I am your host, Bruce Anthony. Thank you for listening and watching wherever you get your podcasts and video podcasts. Subscribe, share, like, comment, and rate us. You can find us on Instagram, YouTube, and Twitch at unsolicited_perspectives. You can find us on Twitter and TikTok at unsolicited_PER. Watch us live now. Watch us live every Thursday night, 7:30 p.m. Eastern on Twitch and YouTube. Our audience continues to grow with each and every episode, and I humbly thank you.
On today's episode, I'll be interviewing Will Wiard. He's a former real estate agent and managing broker. We're going to be talking about his life, his history in real estate, and the current real estate market. But first things first. Hey there, podcast listeners. It's Bruce Anthony here, and welcome to another episode of Unsolicited Perspectives. Today, I want to talk to you about something that's been on my mind lately, the importance of staying hydrated and taking care of ourselves. Whether it's prioritizing our health and wellness, or gearing up for festival seasons, or just gearing up for whatever season or time of year, there's one brand that's been my go-to for all things hydration, Liquid IV. Speaking of health and wellness, let's dive into how Liquid IV can fuel your well-being. Imagine starting your day off right, feeling refreshed and energized. Liquid IV Hydration Multiplier is the missing piece in your daily routine. With just one stick, you get 5 essential vitamins and 2 times faster hydration than water alone. It's perfect for those early mornings, pre-workout boosts, moments when you're just feeling run down, or even after a late night or long flights. I absolutely love how convenient Liquid IV is. The packaging makes it easy to bring with me wherever I go. And let me tell you, it's become vital daily part of my routine. The flavors, let me tell you something, they're incredible. From refreshing sea berry and strawberry lemonade to classics like lemon lime and watermelon, there's a flavor for every preference. It's like a burst of hydration with a hint of deliciousness. Picture this. 1 stick of Liquid IV mixed in 16 ounces of water, hydrating you 2 times faster and more efficient than water alone. And with 12 mouth-watering flavors, you'll never get bored with your hydration routine. Plus, Liquid IV is packed with 5 essential vitamins: B3, B5, B6, B12, and of course, vitamin C. It's also made with premium ingredients, non-GMO, free of gluten, dairy, and soy. This is hydration at its finest. But it doesn't stop there. Liquid IV believes that access to clean and abundant water is the foundation of a healthier world. That's why they partner with leading organizations, finding innovative solutions to help communities protect both their water and their futures. It's incredible to know that Liquid IV has already donated over 39 million servings in 50 plus countries around the world. They truly walk the talk. Get 20% off when you go to liquidiv.com and use code UNSOLICITED at checkout. That's 20% off anything you order when you shop Better Hydration today using promo code UNSOLICITED at liquidiv.com. Remember, folks, taking care of ourselves should always be a priority. So why wait? Head over to liquidiv.com, pick your favorite flavors, and experience hydration like never before. Stay refreshed, stay hydrated, and keep rocking those unsolicited perspectives. I'm here with Will Wiard, former real estate agent, current broker. He's got a couple of different awards. He was 30 under 30 for something, 40 under 40 for something. He'll break it down and explain it to us. But we're going to be talking about real estate. I'm happy to have him on. He's a friend of mine. And the reason why I'm having him on is to tell a little bit about himself and to also give us the rundown on real estate. Every time I talk to him about real estate, he knows what he's talking about. So, Will, welcome to the show. I really appreciate you coming in.
Well, Bruce, thank you as always for having me. It's a true honor. And again, excited to be here.
Well, I mean, I never had you before. So you mean, thank you for having you on.
Yes, thanks for
Not
having me on.
always.
I mean, we talk about this all the time, so thank you for having me
Yeah,
on.
we talk about real estate all the time, and I was like, man, I got to get you on the show to tell people because a lot of people don't really understand what's going on out there in the real estate market. But before we get into all that, let's get in a little bit about your background. Can you share how you got into the real estate industry?
Sure. Yeah, I got into real estate the summer of 2007. Believe it or not, I always make the joke I use really good hydrating facial lotion, which keeps me looking this young. But got in about 17 years ago,
Uh
and
huh.
got my broker's license in Virginia when I turned 21. And I managed a small family, a mom and pop shop for about 3 or 4 years. Then moved to Arlington, Virginia, and sold real estate for a good while. On average, I think our office and our team did over 200, 300 million in volume as a group. And then shortly after that, I went into management in my mid 20s. So I was a managing broker around 25, and I've been doing that ever since.
Okay, and can you tell me a little bit about what the difference is between being a real estate agent and being a broker?
Sure. In Virginia, let's just keep it simple. When you get your license, you're a licensee, and then you join the NAR, which is the National Association of Realtors, and that's what makes you a realtor. And that's when you make the obligation to be part of a higher code of ethics that protects you and the public's best interest. And then, if you want, you can continue on your education. And after 3 years of working full time in the state of Virginia, you then qualify to receive or test for your broker's license, at which time you can take the test and you can stay either as an associate broker, work under a firm, or you can go and become either a principal broker, or if you want to manage, you can look at other opportunities there and become a managing broker. So the level of entry is usually get your real estate license first, and you got to work 3 years to qualify for the broker's license, and then you can kind of decide which path is right or which path is best for you.
So we talked about how you entered in. What
Mhm.
sparked your interest into real estate?
That's a great question, Bruce. So my father was, I'd say, my motivator in getting my real estate license. The summer I graduated high school, I was really excited to go to college, and he, being a former Marine and military person, said, hey, let's get some other things on your checklist for the summer. So he made me get my real estate license, and so again, it was one of those things where at 18, you don't really know what you want to do in life, and I didn't know if I wanted to be in real estate or not. And luckily, I took his advice, and here I am today.
So would you say that you fell in love with real estate as you got into it? Were you enthusiastic about entering real estate? Like, where did that passion grow?
Yeah, I mean, I would say it was a love-hate relationship at first. I mean, the industry as a whole, nationally, I think the average age at that time was 55. So I don't even think I was considered an infant in that stage in terms of breaking into it. But as I kind of got my legs and learned, and I moved into commercial real estate early on in my career, I liked that because it was mostly number-based and business, centric, which was what I was studying in college. Whereas residential historically is more emotional based and more emotionally driven because it's someone buying their house. So that really, got me excited about it. And then as I moved into, sales and was able to achieve a few awards, as you mentioned, such as like 30 under 30 and local accolades, being featured in the Washingtonian at a young age gave me the confidence to kind of move on. So, I got tapped to go into management and was very excited to kind of see where that would take me after doing sales for a good 6, 7 years. And that's really where I think I fell in love with it when I got to see other people grow that came into the industry, had no experience. And then
Mhm.
by able to train them and show them the ropes and not have them reinvent the wheel really, excited me even more. So that's why I've stayed in management and continued to where I'm at today, which is, the broker for about 5 markets. And that in itself is a fun challenge overall.
Almost 2 decades of being in the real estate industry.
A lot has
What
changed.
is, yeah, a lot has changed, but what is something that you consider a highlight, a particular experience or project that is most memorable to you and impacted your career?
I would say one of the most impactful elements or things that have happened in my career was when I purchased my first house. I was
Mhm.
19 years old, and I was at the courthouse steps of Fairfax County, and this was a new venture for me, and I was able to bid on a property. Had never bid on a property before, and secure that property as my primary residence. And back then, this was right after 2008. A lot of things were going on for those who remember. But that in itself, when I was able to see it come full circle and use the skills that I had to purchase my own property, I was pretty excited.
That would be pretty exciting for purchasing your first home at the age of 19. So you said that you've done both commercial and private
Residential,
residential, commercial and residential. But let's focus a little bit about the commercial aspects of it right now. You've worked with Amazon and Nestle. You said that you take the emotion for residential is in it and the emotion for commercial is not. What was it like working with those two companies?
It was exciting. I mean, both companies are completely different. I'll tell you from for Nestle as an example, the company I used to work for, we did the relocation for their North America headquarters from California here in Roslyn. And so we actually moved their staff. And so a lot of my agents in my office and in the other offices in and around the Northern Virginia area were tasked with helping those individuals purchase the residential property. On the commercial side, we had the opportunity, one of my agents represented the former CEO of Amazon and purchasing a commercial building in DC in that acquisition. And that was interesting because that, had no emotion in it. It was just purely due diligence. It was making sure the zoning codes were right and all of that, and the finances were all correct. So two big companies, two international companies, but the approaches were different. And the insides of those deals were, and in terms of the details of them, were different. So again, the commercial side of things, you're looking at dollar cents, timelines, acquisition costs, things along those lines. Whereas on the residential side, it's purely, hey, I need to move in the next 6 months or what have you from a relocation perspective, and you have to look at the company as a whole and how your team can assist them with not just the emotional side, but also helping them learn the ropes of the market. So one thing for Nestle that we did is we actually had their staff fly in early, and some of my agents would drive them around and show them different parts of the DMV, because there's, as a huge difference between Maryland, DC, and Virginia.
Yes.
So that was a whole new element of showing property that I don't think anyone really been exposed to yet. So again, it's one and the same, but at the same time, the emotional aspect always adds another level to it.
Okay, so in approaching
Yeah.
large corporations and in approaching individuals, obviously one is a higher volume, right? You'll make more money doing corporations and doing commercial than you would do residential. But the pitch to get them as a client is obviously different. Can you explain the differences in pitches between commercial and residential?
Yeah. So usually it goes through a relocation company, and the relocation company will identify one or two companies usually and get a bid to represent them. In order to qualify for that bid, and now we're talking high level residential sales because of the volume, you have to have the agent count and the background to fill that void. So again, we're dealing with an account of sometimes 100 plus individuals moving within a 6-month period. Some is a little bit longer, some is a little bit shorter. But on the residential side, you have to have the agent count, you have to have the knowledge base. And when you pitch it, fee obviously is a part of that, and how that fee structure is implemented. But also just making sure that you're able to represent those clients' best needs, and there's the inventory there for them, and you're able to abide by their timeline to move, the human capital to the market within 6 to 8 months. So there's a lot of planning and logistics that go behind that, and that's not just like, hey, we'll sell your house, or hey, call us, we'll buy your house. There's a team that's involved. So that's on the residential side when you pitch that to a corporation. On the commercial side, it's a little bit different. Sometimes there's NDA sign where, the company doesn't want anyone to know that they're moving into that market because it might be a publicly traded company, and they don't want other companies to know that their competitor might be moving into town. So you might get called up by some random person who says they represent a company and say, hey, come meet with us, sign this NDA, and let's see where it goes. But, again, we're inside the DMV. There's a lot of government companies. There's a lot of private sector now where there hasn't been in the past. From the commercial side, and when it's just purely commercial with the relocation thing in mind, it's usually a lot of quietness, a lot of decision making. Sometimes they'll call you a year will go by, and that's what a lot of people don't understand sometimes is residential agents will say, hey, I want to get into commercial, but they don't know that the timelines for either acquisitions or leases or any kind of project that's involved might take a year, 2 years to go from start to close. And a lot of things can happen in that, in that timeline. I mean, things can fall through, budgets can be reassessed. I mean, there's a lot that goes into that. The exciting part of that, obviously, though, is that you're able to be a part of something that not a lot of people are a part of, and you have, a little bit more of an inside understanding of the movers and shakers in a certain market on the commercial side. So that part, from my perspective, is pretty exciting.
So personally, what gives your juices revving more? The thrill of landing a big contract for a commercial deal, or the excitement of helping people buy their first home?
Back when I was selling real estate, I would say helping someone buy their first home gave me more excitement than landing the corporate contract, because you're able to see someone's life change during that transition. And that to me was most fulfilling, most rewarding.
Okay. And now?
Now I'm, back office. I deal with litigation. I deal with contracts. I deal with agents, running into issues. So, like I said, my career is a lot different nowadays, and I don't actively sell as the broker for my company. But, I get to see through our partners' eyes and the people that we represent. And, I work for a company called Side, and, we're a white label company by design. And so we bring on top producing agents and help them grow a business and support them in their growth. And doing so, the rewarding aspect of that is I get to see a partner who might have just been a solo agent build a firm, bring on new agents, grow into other markets that they've never been a part of. And that is kind of like a combination of everything, the commercial side and the residential side, that I get to be a part of. And that to me is pretty exciting.
So you merged the thing that you fell in love with when you were a young real estate agent with helping people, and then fostered that same thing with helping people. Not only, I mean, they're helping people get their new homes, right? But you're helping people expand their business and grow.
Yeah.
And now that gives you a kick. That's really dope. You have all these awards. I said 30 under 30. I said 40 under 40. Can you explain to the people out there what exactly that is? Because like I said, almost 2 decades in the game.
Yeah.
So you got real skin in the game, but you're still a very, very young man. So can you tell us about these awards that you've gotten?
Yeah, I'm looking forward to the day one day where you won't be considering me a young man, but that's funny.
Somebody older than you will always consider you a young man.
I just joke with you on that. I had the honor and privilege of earning, I guess, 30 under 30, which is the National Association of Realtors every year puts out, a request to submit every single individual who's in the real estate industry and a member of the National Association of Realtors, their package to be considered one of the 30 under 30 that year. And you are voted by your peers. You're voted by other people in the industry. And, it's a very tough competition, because I think collectively over all the years they've done it, they're still under 1,000, 30 under 30. So that was very, that was a hard feat for me in my career to achieve, but I'm very honored to achieve that. And then most recently, locally, there's a group of top producers. It's called Nova 40 under 40. And I thought, hey, let's give it a shot. Let's see if we can do it. And representing my company was really the motivation behind that. And luckily, I received that award as well. So the NAR one is a national recognition, and then the local Nova is DMV based.
Okay. And for those people that are listening overseas, the DMV is the district, which is Washington, D.C., Maryland, and Virginia. So that's really dope. With these awards, how did that impact your career?
I would say the first award being, again, coming into the industry at a very young age, connects you immediately with the nationals network of all these other people that some of them think they're, alone in their market. Cause, we're talking every state in the 50 states. So we got North Dakota people who, are doing 300 transactions a year at, 150K average sales price. And then we have people in, Southern California doing, similar business at $1 million sales price. So you have so many different people looking at things differently, but coming together and really understanding that one of the keys, in my opinion, of why we made it or why we're a part of this network is because we take, our clients' best interest at heart, and we represent. And what it really comes down to is customer service and customer care. And that's really what drives us to get to where we were. So when you're able to collaborate, like, you know, I've talked about this with other like-minded professionals across the country, not only does it open your eyes and humbles you as an individual, it also gives you new insight to way to approach a certain situation or problem. And you also get a lot of good intelligence about what's going on in the market, what things to be on the lookout for. So overall, it's just, it's a benefit which I didn't even know to what depth it would be until I was able to achieve that. So, I would recommend anyone who's currently in the space and is under 30 to definitely approve, because it will definitely make you a better operator in this industry.
Well, that leads me to the next question, and you, I guess, kind of answered it a little bit, but maybe we could elaborate a little bit
Sure.
more. Of, like I said, almost 20 years in the game, gotten several awards, done crazy business. What advice would you give to young professionals thinking about entering in the field?
So I've gotten this question a lot, and I get this question worded a lot of different ways. And I'll say this. When I'm managing an office in some of the past companies I've worked for, I've had the privilege of managing agents that are 78 years old. Some actually, I think one was 89 years old, to 20 years old or 18 years old, because the youngest you can be is 18 to get into real estate in Virginia. And I look at their, the industry through their eyes, and the older generation is all about word of mouth, meeting with people, really taking and building their own, name in a market. And the thing I found is a lot of them don't even have a website. They've never had a website. They rarely use their cell phone because they've built that, reputation in the space. And I've actually had people come up to me and say, "Hey, is that person still in your office? I'd love to work with them. My sister's brother's sister said they're the one to go with." At the other end of the spectrum, we have someone who's new to the game, new to the real estate industry, has no experience, but is all over the internet, right? And so they have the websites, they have the social media, they have the videos, they have all of the posts, they have all of that. The thing I would say is that is all great. You got to incorporate what the older or the more seasoned generation has utilized to grow their business, and start there. And for me, one reason why I think I was very successful very early on was because I knew I didn't have any knowledge, and I didn't have any real connections. I was 18 years old. But what I did have is I studied the contract. I studied the rules of real estate in and around my market. And I really made sure that if anyone tried to challenge me when I was representing a client about the terminology or some kind of negotiational aspect of a deal, I knew my insides and out about that like a T. So that is really what I think that anyone getting into the real estate industry, not saying everyone does miss that, but I think there's a lot more opportunity to dive deeper into that content, and they need to really understand it. And now once you get that down and you understand the insides and outs of the contract and how, the MLS works and all the rules and regulations, definitely utilize the social media and all the other things that they're great at. But I see that big difference between both generations.
So set the foundation before laying the concrete.
Exactly. Yes.
Yeah, that sounds about right. Like, so young
But
ones,
really set the foundation before you lay the concrete. Don't think you've laid the no. Like, really dive into it and get a good mentor, because that will pay dividends, so that you don't fall into a trap or fall into a pitfall that someone else has done. So the other thing I'd say is find a good mentor, reach out to people. Don't be afraid to ask for help, because a lot of people are in this industry that are willing to help you.
So I guess that leads to it. And here we go. I'm about to throw you a curveball. How can you find a good mentor? Just because somebody does crazy business doesn't necessarily mean that they would be a good mentor. So what are some things that some of these young people that are entering in the field, and I say young people, so new people entering in the field,
new to the industry. New to the industry. There you go, right there. What can some people that are new to the industry look towards as characteristics of a good mentor? I would say start with your local association. Look for people in and around your community that are currently doing real estate. Give them a call. Say, "Hey, interested in getting into real estate? Do you have 5 minutes? Can I take you to coffee?" I'm also, happy to take call. I've taken calls. I've helped mentor agents, over my career. Find someone local, and also find someone that you connect with. So if you find an agent who likes the same things you like, and you're able to, vibe with them and connect with them, would connect with them on that, then do it. But I would say at the very least, start with your local association and your real estate school or whatever your venture or how you get started takes you, and then go from there.
Now, Will, you and I have had personal conversations that I'm on Instagram and real estate agents are putting out information and I'm like, hey, what do you think about this? And you flare up a little bit because you feel like there's a little bit of disinformation. And the reason why we did the entire first segment is because I gave all of my listeners your accolades to know this guy knows what the hell he's talking about. So listen to him and learn. The first thing that I want to talk about is what are some of the current and emerging real estate trends that buyers and sellers, buyers and sellers should be aware of?
Okay, so yes, you're right. We are in an evolving market. There's a lot of changes that have been going on over the last 22 months. And for anyone who's listening who has a real estate agent, talk to them first. But I will try to give valuable information that you can use in that conversation if you are currently represented by a real estate professional. Historically, let's just kind of rip the Band-Aid off. Interest rates are at the highest level it's been in a long time. And, when you hear the media as a whole, the media likes to, do these scare tactics of, oh, it's going to go up, it's going to go up, it's going to go up. And there's not a lot of depth in terms of what you hear in the current market from, at least as an overall consensus. So right now, the key that I would say out of the gate is educate yourself on your, not everyone else, your financial situation, your purchasing power, and where, if you are in the purchasing side, can purchase a property, what your DTI is, what your debt to income ratio is. That's what that DTI is.
Yeah, I was going to ask you. It's like you just threw it out there and didn't really get no explanation.
What kind of loan you would like to explore? And again, not a loan officer, not making that claim, but talk to a lot of loan officers before you purchase a property and find out, what programs do you qualify? VA, FHA, conventional. There's a lot of things to look at. Now, that's on the purchaser side. Very quick synopsis on that. On the seller side, we are in a different market than where we have been historically. Not saying that it hasn't, still been, and everyone likes to say it's a buyer's market or it's a seller's market. I would say it depends on where you are financially and where you are when you purchased your property. So, for example, if you purchase a property for $300,000, and that's an extreme. So not a lot of people did that. I don't know if any really did. But if you paid an absorbent amount of money over what the list price was over the last 22 months, 3 years, what have you, then you're going to have to sit down and really look at what kind of lateral move, if you do need to sell your house and move somewhere else, you have. Because the cost of the money that you use to purchase that property is not the same as in our current market. So that's something you need to understand on the seller side.
When you're talking about the people that you're talking about, people who are selling, so they bought the home within the last 2 years, but they paid more than the actual listing. So they paid more than that. So we saw that a lot last summer.
Yeah,
people were spending $100, $150, $200,000 over asking price. And what you're saying is, you have to decide what you want to do based on the numbers that are associated with where we are now as opposed to when they bought it?
Yeah, because again, the interest rates were at a different level. The cost of borrowing money was at a different level. So if you needed to move either through work or you just wanted to move because you wanted a different house somewhere else, before you decide to sell your home, you really need to talk to either your financial advisor, a loan officer, or your real estate agent, real estate broker, to see what options you have on the table. Because when you do that and you have a quick turnaround, the equity in terms of, or the market in itself in terms of appreciation, in some cases doesn't have time to catch up. In some cases, if you didn't pay too much over, if you paid at list price, you might have a little bit of equity in the property. Every case is different, but you need to really sit down and analyze that. And if you're not a numbers person, which is fine, talk to someone who is. But that is the important aspect that I wanted to bring to this, is that, there's so many moving elements when you go either to acquire personal property or sell a property, that you're not going to hear on the news, that they're not just going to tell you. And you got to slow it down and really understand what you and what your ability is to either purchase, or if you need to sell, because it's not created equal for everyone else. Everyone has a different, credit history. Everyone has a different debt to income, DTI. Everyone has a different loan, or some people have paid cash. I mean, one thing to keep in mind is 40% of mortgages that were purchased in the last 2 years on average were cash purchases. Historically,
So
that's
what does
never
that
been
mean?
done.
What does
There was
that
no
mean?
mortgage. So they took their money and paid pure cash. So again, if you're going to sell, are you going to get the rate of return that you want on that property if you either paid at list or above? Now, again, it's up for discussion, but it's things I want you to think about when doing that analysis.
So basically, to break down everything that you just said so expertly, it is, don't pay attention to what people say the market is. Pay attention to you, because
Yes.
you are determining what is in your world and what's within your scope. If they say it's a buyer's market, but you ain't got the bread, it's not a buyer's market. If they say it's a seller's market, but you didn't have enough equity in it, it's not your market to sell. So that's basically it's what. Don't worry about what they're saying. Focus on you.
Yeah, and it's we see this a lot where someone will say, "Hey, my friend at the same company that I work at just purchased a house for $500,000. I think I could purchase a house for $500,000," not realizing that person has no credit card debt, is completely, has savings, has saved every penny since he got into his career, in his job, and you, on the other hand, is partied up a little bit. Yet your credit isn't that great. You're not equal. I mean, that's the thing. But everyone's going to try to come up with that. And not everyone. I'm just saying that a lot of the narrative is, oh, if they did it, I think I have the same ability to do so. But stay in your lane and find out. And sometimes you'll be surprised what options are on the table. For those that are, military and the VA, there's great VA loan programs out there with little to no money down. Again, there's strategy behind trying to compete in a market with that kind of loan. But there's, again, it's what you and what matters to you and what you can do. That is the takeaway in that, and not anyone else.
Okay. So I know one of the things that we've talked about personally
Sure.
is, you said it earlier at the top, interest rates as high as they've been in a very, very long time. But I'll have people that are on my Instagram who are real estate agents who are saying, don't worry about the interest rates. It's really not that bad. You've said that's not completely true, but it's not completely a lie. Can you kind of explain what that means?
Sure. You got to strategize. So right now, and I would say this to anyone that I talk to, interest rates, let's just say they're 7%. I don't know if they are today, but just say they are. And everyone's thinking, oh, I'm going to purchase when interest rates go down or whatever. Or maybe they need to purchase now. But one thing that I've always utilized in my career, and one reason that I've tried to help agents think differently, and that's an important part. And that's one reason why we brought this up when we were talking, is you want to stay clear of what everyone else is doing in a market like what we have. So if you have a buyer, or if you are a buyer, and you see that interest rates are at 7%, but you found your dream home, or the home that meets all of your wants and needs, this is what I would strategize to do. I would talk to the seller, see if you can get or talk with your agent to try to see if you could get any concessions on the buy side. I would talk with a few lenders, see if you can get a free refi with that loan, so that you can then utilize a lower interest rate when rates do dip. And if they do dip, then you're able to lock that in at a lower rate. So the point I'm making here is you need to think outside the box a lot in a market like we have today, and really, strategize, going back full circle to what we were saying earlier about attacking or approaching an offer scenario in our current market. But if you find that property, don't dismiss it, utilize it. But there's other things to take into consideration. What I'm seeing, to your point, is everyone's saying like, hey, your car loan is X, your credit card is this, blah, blah, blah. It's a great time to buy. That might not necessarily be true, because what I was saying earlier is everyone's different. But if it's
Right.
something that fits your needs and it's the house that you want, let's make that offer. But let's see if we can make that offer where when interest rates drop down to say 5% or 5.5% or 6%, that we're able to pull the trigger and save ourselves a little bit of money by getting that free refi by that lender that we asked for, or getting kind of some kind of concession because the house has been on the market for more than 30 days from the seller to offset any additional cost to us.
Now, there was something that you brought up as far as the refi. So, hey, can you break that down? I know when we had a conversation, you were like, hey, look, you can go to, was it your loan officer that you said that
Yeah.
part of the agreement is, hey, the interest rates are high now, but ask for a free refi loan.
Yeah. I was
Break
talking
it down for me because I'm
to a
butchering it.
lender, and again, I'm not a lender, but I was talking to a lender, and they made sure that I said this as a disclaimer. Make sure it's a free refi, or as free as can be, because there are fees any single time you refi a loan that are incurred by all parties, and some of them are hard fees. But you could hypothetically negotiate a free refi with your lender to help offset any additional costs when rates go down. Now, you're going to have to pay certain fees. Talk to your lender about those fees and what they might be, but no one's going to ask for that unless you know to ask for it. And so that's something that I want to make everyone aware of, is that, make sure everything's, above board and everything's legal, but there's nothing that restricts a lender from offering that kind of, I wouldn't say discount, but that kind of incentive, throughout the process.
It's just a sweetener to the deal. Look,
Yeah.
the interest rates are higher than they have been in a very long time now. That doesn't mean that they're going to continue to stay this high. Let me get that free refi. So in a couple of years, when interest rates go down, I might be paying a high mortgage now because of a high interest rate. But in a couple of years, when the interest rate goes down, I got that free refi. I can change up my whole mortgage.
Yeah.
Is that
Make
basically
sure
what you're saying?
include in the loan docs, ask for it. I'm sure some might be willing to offer it, some might not be, depending on who they are and what their restrictions are. But it's a question that should at least be brought up in that conversation and exploration when looking for a lender.
Okay. Another thing that you talked about when in our personal conversations was assuming a loan or
Sure.
assuming a mortgage. Can you explain to the people exactly what that is?
Great question. So we are in a very unique market in the sense, to your point, rates are high, low inventory, all of that. There are three loans that can be assumed. The most common three loans that can be assumed is FHA, VA, and USDA. Now, again, talk to your loan officer about this, or talk to your agent about this. But in doing so, you still have to meet the qualifications of the loan to be assumed. But there's many times that people are not aware that you can assume a loan at a lower rate, or under certain parameters. They think they just all have to go out and get a new loan. So again, you got to slow things down, build out a strategy, as I've said, throughout the podcast. But that is a way to assume it or explore assumptions. The other option is seller financing. And what I had said earlier about 40% of properties were purchased without a loan. You could, if you found a house that was paid in cash prior, and you can search this data online for the most part, and it's actively on the market, you can inquire with the seller about seller financing. You can say, hey, I'm going to give you a big portion of money down, but let's work out where you are essentially the bank, and I'm going to be paying you every month because you don't have a mortgage on this property. And again, this kind of scenario that we're talking about here takes time. There's a lot of competition for it. A lot of people might not be aware that this kind of opportunity exists in the space, but this is just another thing you should be exploring and talking about and bringing into your strategy if you are on the purchasing side, or even if you're on the selling side and you want to net either the best and highest profit for your home on the list side, or if you want to try to save as much money as possible to offset the high interest rates on the buy side.
Wow, I didn't even know that was an option, that the seller could actually be the bank. Now, okay, there's some things that come along with that, right? Like if you decide to go that route, if you want to sell your home and you want to do what you suggested, which is essentially be the bank, what are some of I'm trying to come up with the right adjective to use in this. What are some of the fallbacks?
Fallbacks. Great idea. It depends on how you do it. And again, I'm not an underwriter. I've seen loans. I'll tell you from experience. You usually give a down payment to an installment or a down payment to the seller, and then you pay a monthly fee as you would a normal bank, right? The seller still holds the deed of that property while you're paying. And if you were not to pay, Virginia's famous saying, if you don't pay, you don't stay. So some of those scenarios could be if you feel that you might default on, that kind of note that you have or deal you have with the seller that did the seller financing. There might be, eviction. There might be other penalties involved. But again, that's why we have great, attorneys, and that's why we have great loan officers and everyone, that I've worked with, especially here in the Northern Virginia, DC area, that can help you with that. But overall, I would say, know what the terms are going into the transaction before you sign the deal.
Okay, so I don't know if I'm getting this right in this description, but is that kind of like rent to own? Because you're not building equity in that particular instance. You're not building equity, but you're paying off the loan agreement that you have with the individual seller. And for those people out there that are trying to follow, I know I'm going all over the place, but what I'm trying to do is with Will, give you guys a lot of options to think about when purchasing or selling a home, because everybody is talking about this is not a good market. And once again, like Will said, it's all individual. It can be a good market depending on your situation, or it could be a bad market depending on your situation. We're just giving you options. So
the rent to own is I'm renting, like I'm paying a monthly fee to then at the end of my term of my lease have the option essentially to buy the property. So I'm going to be in there, and then at the end of my lease, I'm renting, and then I get like the first right of refusal, the option to purchase the property at the end of that lease. So
and all the money that you put into that rent
could not be. I mean, there's a lot of different deals I've seen in my career. So,
okay.
I mean, but that's one way to do it. Another way on the seller financing side, and again, I highly recommend anyone listening who might, try to challenge some of the terms that we're using here, speak to your loan officer, speak to a financial institution. But you usually do a down payment or a large installment, and then you work out either monthly payments and maybe an additional installment or what have you under the seller financing guidelines. So you might do one big installment. Let's just keep it simple. You're buying a $500,000 house. You put $200,000 down, then you'd be paying monthly, and then maybe every 6 months or every year. I don't know. I mean, there's a lot of different ways to structure it. You're going to do more installments, and then eventually you've paid off that and it's your house, right? But the seller has essentially held the note to that property until you have paid that off. And so they are still in control of that asset. All right. To a certain degree.
Yeah.
Rent to own, I'm renting. Either the rent that I'm paying is being deducted from the sales price. We've agreed to a sales price. We've entered into an agreement. And therefore, at the end of that term, I'm going to purchase the property is another way to look at it as well.
Another way to look at it. So, okay. So you can assume loans. There's different loan options out there with FHA and
VA
USDA.
and
VA. Okay. Rent to own or rent to buy. Asking for free refis. What are some other options that people can use to navigate these high interest rates?
I mean, I'm sure lenders would probably say pay down or buy down points. That's something that you'd want to talk about.
What's that?
Like you have a mortgage rate, but then you could pay additional money to bring the rate down.
Okay.
Again, talk to your loan officer. Utilizing either your 401k or any kind of other investments that you might have if you wanted to look at additional money in terms of a down payment. But again, talk to your loan officer and your financial institution, because one thing I've seen in the past is someone will come into our office and an agent will represent them, and they might have $500,000 in investments, but it's not liquid investments. So on paper they have it, but in order to get that liquid, in order to purchase a property, it might take 60 to 90 days. And if you've entered into a contract of sale and it's a 45-day close, we have a problem. So know that, like I've said at the very beginning of this, know your strategy, build out a strategy, and be transparent with your agent, because it's gonna help you out in the long run. But those are some of those examples that I think is important to think about. So looking at options, and if you've never taken out of your 401k, talk to your financial institution to see if there's what the tax implications are and what kind of options you might be, because some allow a one-time withdrawal to purchase your primary residence. You can get gifts from family and friends. That's another common thing. I had one client years ago who got like 30 gifts to purchase his first property. And so, again, there's a paper trail there that you need to follow, but it can be done. But like I said, you got to get creative. You kind of got to get down, and it's and do your research. Do your due diligence, do your research. But there are, even with the current rates and the current market trends that we have going on, there are options.
And I know me and you have talked about this personally,
Sure.
and you've said, when people find their dream home, even though the interest rate is high, obviously, like we've been saying this entire conversation, do your due diligence and find out what's best for you. But
Yes.
if you can do it and you found your dream home, don't be fearful of that high interest rate, because there are ways to get your dream home and deal with the high interest rate now or at a later date with the free refis, if you can get that.
Yeah. And that's the thing I think is the key takeaway here is stay in your lane, know what works best for you, and don't listen to the noise. There's a lot of noise in anything and everything right now. But assess, put together a plan, and go from there. And that's really, I think, the key advice I can give anybody is know what you want and stick to that.
So many real estate agents will post these things on Instagram, and I'll show it to you, and you will say, that's just not right. How can people find, because in every industry, there are people that are really, really good at their job, and there are people that are really, really bad at their job. So there are some really great real estate agents out there, and there are some that are not so great. What are some of the qualifications that people should be looking towards or looking for in real estate agents when they are looking to find a real estate agent to sell or buy their home?
So a few things I would consider is the agent that you're either talking to, their level of devotion to their career in real estate. And what do I mean by that?
Yeah, give me an example.
Are they full-time? Are they part-time? Are they in the market that you're looking at to purchase? Do they have local market knowledge? Are they out of state? Are they a friend or family? The thing I would say is, if anything, if you have a friend or family that you know personally and is a great person, but you don't see yourself working with them to purchase your first property, talk to them, and maybe they can help you find somebody that will represent you better than what they can do. And they might get a referral fee. But, at least have that upfront conversation with them about what you're looking to do. And if they're not licensed in the state, don't let them represent you, because they can't. So that's the first thing I will say. They can't represent you. Okay. But maybe they can refer you to somebody that they would say, hey, here's an agent that I think will help you and get you to the end, and get you what you need, and get you across the finish line. That's what I would say is the first thing. The second thing is, not all agents are created equal, in the sense that although some agents you might see, on social media, to your point, with a ton of content, they might not have the market knowledge in the market that you're looking at, even though they have a ton of content that you need, which is fine. Explore, talk to different agents, talk to different people. Be transparent, though. If you are in and you have entered into an agency agreement with somebody, let the agent know, because that is the biggest headache I think anyone has ever dealt with is, oh, well, thank you for that insight. I'm going to go work with this other agent I've been talking to for the last 4 weeks. Don't do that. But at the same time, not like in any industry, fitness or education or medicine, you got to do your due diligence. So that's where I would start. In addition to that, ask questions, inquire, but be honest about it. And a lot of times, if an agent is a local agent and they have experience, they will sit there and listen to your questions and answer them without any kind of obligation to work with them, because they want to help you. And you'd be surprised how many times that happens. Now, granted, hopefully at the end of the day, if it's a good fit personality wise and you guys have a good vibe together, you'll work together, or you'll refer them out or what have you. But that's where I would start.
Okay. And I guess the final question I would have for today is, we've given a lot of people a lot of information.
Sure.
Are there certain websites that people can go to, certain networks or associations that people can look into if they're looking to buy or sell a home?
Yes. Well, you can always contact me and I'll direct you to any of our partners. So that's where I will say that'll be my plug. If you need anything or want any local market knowledge, even if it's somewhere outside of the DMV, I'm happy to try to connect you with who that is. Referral fee or not, I just want to help you out. If you're on the
And by the
rental
way,
side,
and by the way, ladies and gentlemen, for all of our guests, their bios are on the website. So when the show launches, you'll be able to go on the website, unsolicitedperspectives.com, and click Will's name, and all of his information will be right there where you could contact him to get more information on real estate. Go ahead.
yeah, here to help you nonetheless. If you're on the rental side, there is one app that I actually recommend. It's called Zumper. They did not pay me to say that, but it's a great resource just to kind of look at apartment buildings and what's coming on and going off the market. If you're looking for, financial insight, talk with your bank first, like where you have your money. Like start
Mhm. Yeah.
start plain and simple, right? Start
Right.
there. If you know a realtor and you're interested in learning more on either buy or sell side, speak to them first. Just kind of get the lay of the land. And again, I don't want to be biased for some of the things that are out there and some of the sites that are out there because everyone's different. But the one thing I will say is do your research, spend more than 10 minutes looking online. Don't go to the first ad that you see because they're paid ads, and really dive into the market that you're looking at. And at the very least, if there's anything I can do or my team or anyone in my network can help you with, we're here to help.
All right. That is Will Wiard, managing broker at Side. What would you like to say to the people out there to just, and to end this interview?
Well, thank you for having me on. It is a true pleasure. And, again, thank you for listening. And hopefully at the end of this, like one reason why I've been in this industry as long as I have is to give back and try to help, the public and people looking into real estate, either from a career perspective or just from a buyer seller perspective, and help them along the way. Because, again, one thing we didn't get into, but I've made tremendous mistakes in my career. And if there's anything I can do to help offset anyone else from making those mistakes, I will do my
Right.
very best to do that.
Oh, that's really dope. Will, I want to thank you for coming in. I want to
Thank you.
thank you for enlightening the people out there. Everybody, once again, go to unsolicitedperspectives.com, click on Will's name. That'll have his bio and all of his contact information. Well, not all of his contact information, but his professional contact information. I want to thank you once again for coming on.
Thank you, man.
I think people really, really learned something from this. And until next time, to everybody out there, I'll holler. Thank you for listening to Unsolicited Perspectives with Bruce Anthony. Please subscribe, like, comment, share, and donate. Donations help us keep giving you this free content each and every week. Until next time, Audi 5000. Peace.
Freedom over fame, the cycle stays the same. Freedom over fame.